Thus, we now have with us Mr. Pratik Oswal, the head of passive funds from Motilal Oswal AMC. Good afternoon, Pratik, and thank you so much for taking the time out. It's great to have you with us on Business Today television. First up, your own quick sense on the markets right now, amidst this macro setup of elections and how cricket is shaping up the markets and the sentiments thereof. What is your own sense of the markets, and are you fully invested right now? Are you keeping some cash off the books? What's your own sense?
Thanks for having me here. I'm always invested, to be honest. I've never really had a chance to keep anything outside stocks and mutual funds, and I continue to do so. I think we've been doing it for many years now. But I think overall, honestly, it's been a great run this year, especially in mid and small caps, as you know. And I think there were a lot of challenges in the start of the year, especially the macro front. Oil prices were, I think, hovering around $100, and now that's also cooled off. Inflation in the US has cooled off. Even the war situation, obviously, it's happening, but we believe that that does not have that much of an impact on markets today. And in India, and especially if you look at India today, I think the earnings momentum that we've seen over the last few years have been quite strong. We had a 2 year sort of time correction in the markets in 21, 22, which has sort of had some momentum this year. So overall, I think things have been I would say better than expected, to be honest. And we believe that historically what we've seen is that the year before elections tends to be very good. So I think at least next year and a half seems to be very good. Hopefully a lot more. And the good thing about the markets today versus maybe a rally that happened in 2018, 2019 is that that happened at the back of high valuations. Today, the valuations today versus the valuations 1 year ago are exactly the same. I think we're looking at P multiple about 16 or 17, which is still under, I think around historical average levels or maybe below that. So we believe that this could also, in spite of the sort of run depletion in the market, it could be a good opportunity for anyone looking at investing even today because of how good earnings have been.
Right. Welcome to Market Today on Business Today Television, Pratik ji. It's always a pleasure to host you. And for those investors who was joined the market in the last 2 or 3 years, let me just give a very brief background. Pratik runs India's most well-known offshore fund, which is called Motilal Oswal Nasdaq 100 ETF. At the moment, trading at 128 rupees. And if you look at the 12-year CAGR of this particular fund, it has exceeded 20% each year. So it makes it the most, how should I say, beneficial fund if you have a SIP in this particular index ETF. Pratik, let's try and discuss where the Nasdaq is headed. And a lot of good news coming in over the last 1 week or so. Bond yields are down, the dollar index has also slipped off its highs. So the good times are back as far as trades in global techs are concerned. Very strong returns coming in the ETF as well as the Nasdaq. How do you see this space now?
Yeah, so I think overall, as you said, macros are looking good in the US as well. Inflation's trending downwards. The Fed has clearly mentioned that they may not be looking at further sort of rate hikes in the near future. So overall, I think and even long-term interest rates, as you said, have now sort of they tapered off. So I think the one big reason to why we had this crash yet last year is because of yields going up, and also I think expectations on tech companies were also on the higher side. This year has been the complete opposite. So I was looking at the numbers. If you look at the Nasdaq 100 or even the S&P 500, which is a 500 stock portfolio, all of the gains that we've seen this year, and the Nasdaq is up about 35 odd% this year itself. All the gains have come from the 7 or 8 sort of large tech companies. So I think, and even in the S&P 500, which is a 500 stock index, if you sort of map the top 7 stocks versus the 493 stocks, you'll see a huge divergence. So we believe that this year has been a huge play on I think AI. And that has really led to a lot of these tech companies who most people believe, are going to make the most of the next revolution, which is going to be AI. guys like I think Bill Gates are talking about the fact that this can be the biggest innovation or that we've had in the world since when he started Microsoft maybe a few decades ago. So I do believe that we do believe that I think you are looking at a lot of opportunity, and these companies will do exceedingly well when when it comes to these newer technologies. Having said that, I think most of the growth that we've seen from tech companies, but there has not been any movement happening from the rest of the index or the rest of the Nasdaq index. So we believe that I think going forward, there will be sort of some recovery happening in these stocks as well. So we're obviously very optimistic on the international fund space in general. From our perspective, I think more than the return expectations, the whole idea of having international funds in a portfolio is to really promote diversification. Most, if you talk to any investor across the world outside of India, they have about 10, 15, 20% allocation outside their home country. And in these sort of funds like the Nasdaq ETF, you're not only getting these amazing stocks that you use and consume on a daily basis, but you're also buying the dollar, which I think is very precious because the rupee tends to depreciate by 3 to 5 years time. So I think an allocation in an international fund makes a lot of sense in your portfolio. And obviously, we're seeing that there has been a very good recovery in the Nasdaq, and also there is a lot of sort of growth opportunity happening in the underlying stocks as well.
Okay, Pratik, I wanted to understand from you, your conversations with your, friends in the, West, and of course, FIIs have been net sellers here. Looking at the conducive environment getting created with, macros now shaping in favor of the US again, do you think the flows will continue to be on an outward trend even now?
Yeah, honestly, FI flows. So we actually did a very good study that talked about the correlation between Indian markets and FI flows. So FI flows, DI inflows, outflows, and what we realized is that there is not a lot of correlation between these short-term movements. In fact, the good thing about the markets today is that we're not as dependent on FIs as we did maybe 5 or 10 years ago. I think the retail investors, become the most powerful person in India today, which I think is a great trend because they tend to have a savings mindset, and they tend to have very regular money coming in the stock market, including pension funds and etc. So, I think yes, money has been. The U.S. markets have had a major rebound this year, and obviously there will be a lot more capital going to U.S. not from India but also globally. But we don't see much of an impact happening on Indian markets. Also I think what we've seen is that a lot of the growth is happening in mid and small cap, where you don't really see a lot of FII activity out there. It's mostly happening in the large caps, and I think that's where we see maximum traction happening at least this year. So we believe that yes, I think companies will stick to fundamentals, and that is quite strong today.
Right. Pratik, let's try and make a fund portfolio for an investor who wants to get into the market in this fresh Samvat which has started a week ago. As you very rightly mentioned, as far as the Nifty is concerned, there hasn't been any traction in terms of a valuation that has risen very substantially. So that's a good market to put money in at the moment. So 10 lakhs is with you. How would you allocate it over large caps, mid caps, and small caps? And of course, we need an international tadka as well. What would you do?
Yeah, so that's a very good question. I would say the first question the retail investor needs to ask himself or herself is what is their risk profile when it comes to their, I would say, equity returns. I think a lot of investors are better off not having small caps in their portfolio because obviously we've seen a huge trend in small caps, but over the long run, you might have to ask yourself, do you want to have small cap fund in your portfolio or not? Because they tend to be a lot more volatile. But assuming that our investor base is okay to take some risk, I think the idea is to maybe have a majority of allocation in something like a Nifty 500 sort of an index where you have a, I would say, combination of large, mid, small in your portfolio. So I think maybe I think 50 to 75% of your allocation can be in large caps. The balance can be in sort of mid and small caps. Apart from that, I also would recommend having a maybe a 15, maybe a 15% or a 20% allocation towards international funds. The reason why I say international is because they offer a lot of diversification to your Indian portfolio. The returns, if you see, of Indian stocks versus US stocks have been exactly the same over the last 20, 25 years. But when Indian stocks do badly, US stocks do well, and vice versa. So I think you're really hedging your Indian sort of portfolio in a very big way by having foreign stocks. The other reason you want to have it is because we all feel that there is diversification benefits, buying large, mid, small. But unfortunately, when markets are down, everything is down. So, having some sort of international portfolio is important, and having a major allocation towards large caps. Even though large caps haven't moved as much in the last year, I strongly believe that the largest portion of your portfolio should still be in the large cap space because that tends to be the most stable.